on the higher time frames. So we'll look for that, right, that push down, that consolidation. And then once it breaks, right, there could potentially be a liquidity grab where it could potentially reverse, right? Or we can capture that momentum right off the gates and then have a trend in your actual direction, right? After price consolidates, after a big push down consolidates, it's either going to have a retracement or it's going to expand in the actual direction that you originally thought it was going to go, right? And that's based off our set criteria, right? Understanding relative strength and weakness as well, right? That plays a big factor into our trading, right? Understanding, right? Because when you trade the tech stocks, right, we also have the NASDAQ and the QQQ pulled up right beside to gauge that relative strength, because Tesla, right, Apple, Nvidia, all these
they correlate.
Yeah, they correlate,
okay,
right?
okay.
So that's where we have our edge that also plays in, right? So if Tesla, right, has a big push down and it's staying heavy, right? So it breaks out and then it stays heavy, and then the Qs, right, they have a bounce, right? So let's say the Qs, right, end up sweeping liquidity and then start pushing towards the upside. But then the Tesla stays heavy, right? So we understand if we understand that Qs are most likely going to go back, right, sweep liquidity, it's going to take out maybe previous day high liquidity now. And if Tesla stays heavy, right, underneath that liquidity level, right, we can expect that Tesla's going to have continuation in the way of a trend.
I like it. And do you have the same beliefs in your strategy of, I mean to say, like, if I'm seeing consolidation, I'm seeing that the buyers and sellers in terms of a tug of war, that's how I visualize it, is they're both as strong as each other. When it's market is bullish, we know that the buyers are stronger. They're winning that battle. And consolidation is because they don't know who's in control, and therefore they need to add a player to win the tug of war. And the way I see that add of player is you need price to dip lower to take some sellers out, to take their stop losses, so that the buyers have more relative strength. And therefore liquidity for me is a big one. If I'm to boil it down to one of my key things, it would be session volatility, so the time of day where it's the most meaningful moves will happen, run of liquidity, and then time-based manipulation, and probably just lower time frame confirmations. Those are the things I'm most heavily based on, and those are my non-negotiable criteria. Is run of liquidity something very important for you? Or is your strategy more just like seeing a breakout, seeing momentum, and then checking your other things to see if there's relative strength to support that move, and therefore not so much liquidity?
So for us, the main thing for us, right, like he just mentioned, is when we're playing that momentum on Tesla, for example, right, liquidity is important, but for us, the main thing that's important is the correlation between NASDAQ and Tesla, right? Because NASDAQ, what is NASDAQ made up of? It's made up of all the tech names, right? It's made up of Tesla, Apple, and you need to understand the percentage it's made up of. For example, Apple holds the most weight in NASDAQ.